It's June of 2025, and the long and short of it is that the Phoenix, Arizona real estate market is very sluggish right now due to low demand and low affordability. There are three main measures that affect housing affordability: mortgage rates, home values, and income. In the past, when home values rose too fast for incomes to catch up, it was mortgage rates that came to the rescue and adjusted and brought payments back into range. But in this cycle, rates have proven to be very unreliable, and we can't count on them anymore because it's been 3 years since they went up to the sevens and they haven't really come down lower than 6.5. So we've been waiting 3 long years since June of 2022 to be exact for mortgage rates to decline and save the day, and they haven't. As more time goes by without relief, the more pressure there is on home prices and incomes to adjust. Those two things need to adjust in order to increase demand. And it looks like it may finally be happening. What do you think is going to happen first? That the average income will increase or that the average home price will decrease? I'll give you a hint. Incomes are not really increasing. And if they are, it's only by a little bit, and we can't really feel it because inflation is so high right now. Phoenix, Arizona is entering its 8th month as a buyer's market. Overall price appreciation is flat within 0.5% of last year, with expectations that it may start gliding down over the next few months. Affordable properties under $500,000, which made up 58% of sales last month, have already seen price drift down 3% year over year. So what does that mean? Let's say a house for $500,000 is listed and the house does not sell in the first month or two. So the price reductions begin. The price will usually adjust until the house sells. And according to last month's numbers, the average price reduction was around 3%. So in this example, a $500,000 house will usually sell at $485,000, or it will get an offer once the price gets to $485,000. Sales were down in May compared to last year, but consider it a temporary hangover from April. The announcement of surprise tariffs at the beginning of April led to volatility in both the stock market and mortgage rates, which led to people freezing and freaking out, and this caused lower contract activity in April, which led to fewer sales in May. Consumer sentiment was horrible in April, but improved significantly in May and June because there is a better outlook on business conditions, jobs, and income. So a little better buyer activity in May is creating more June closings, which is what we're experiencing right now. So how do we know all this? We can see this reflected in the mortgage applications index, which rose almost 20% over last year's index, and it's higher than it's been in 2 years. So this is a positive indicator for summer contract activity sales. Accepted contracts over $1 million are up 30% over last month. And this is unusual because high-end contract activity typically declines in May. But like I said earlier, we are a month behind because of the toll that the tariffs took. More and more sellers are taking a pause from the idea of selling. We can see that in the canceled listings that are not getting relisted right away. And sellers have decided that these market conditions are not favorable for them and they're taking a pause. So usually when a listing doesn't sell and it expires, it gets relisted right away. But this time I'm noticing a lot of sellers that are not relisting and just taking a long break, which is good because we don't want an oversupply of listings. We have over 26,000 listings right now and climbing. And a year ago we had 18,000. So inventory of homes for sale is up 45% from last year, and we don't want that number to climb. So sellers, if you don't have to sell, don't. Weekly listing cancellations are up 38% over last year, and expired listings up 84%. While listing expirations and cancellations are up across all price points and property types, for those in the luxury market, June is the peak month for cancellations, and sometimes, ironically, there can be a bigger drop in active listings than in buyer activity over the summer. More luxury listings typically hit the market again in October once the temperatures drop below 100 degrees, so buyer activity doesn't always rise with them over the holidays. Sellers hurting the most right now are the ones trying to sell condos and townhouses. This is the worst I've seen in 14 years for condos and townhouses. People don't want to pay high HOA fees on top of high prices and high interest rates. Any single family price home under $500,000, if it's priced well and it offers value, it will eventually sell. And listings between $600,000 to $1 million are slower, and they're taking longer to sell, and they're having the most price reductions. And this varies by area as well. The towns in the outskirts are the faster to feel the sluggish markets, like Buckeye, Queen Creek, Maricopa, Casa Grande. Those outer markets are taking longer to sell and are currently fertile ground for buyers because there is a lot of new construction and a lot of inventory. So that's it for June. This is a good time for buyers if you want to negotiate and feel like you're getting something. Prices still haven't dropped much, at least not to the levels that people want to see, but they are finally budging. They were not budging for like 2 years. 3 to 5% reductions, that's a good thing. So go get it. If you are a seller who's just selling and you don't need to buy, you can wait. You don't need to sell right now. Just keep the house and wait. If you're a seller who also needs to buy because you're selling your house and moving to another house, the market is good. Go for it because you will win when you buy. You have to give some to take some. Anyway, I hope this was helpful, and until next time.